I'm a director in the operational capital markets team based out of London. We're a team of 75 covering student housing, build to rent and healthcare. I work with a team of 6 that cover the European markets, so everything outside of the UK, which who knows where we'll be after 31st of October. And we work, again, in the student through to senior living space, but working with our teams on the ground in each country, providing them with market intelligence, using our IP from the UK market, bringing those skill sets into their sort of specific countries. So work a lot in France, Germany, Spain, Iberia, in the student and increasingly the senior living space.
Great, thanks. Dan?
So I work in a part of LaSalle that focuses on basically capital that isn't pure equity capital. So we have a number of mandates that we're investing now, from relatively cheap senior lending right up through what we call special situations, i.e. we can participate in a kind of preferred equity or a kind of joint venture equity kind of program. So we have a range of capital for different kind of capital needs for our partners. We have historically done quite a lot in the operational space, so student housing back in 2013, and we now do development lending across Europe. And in the senior living space, we are funding several projects in the UK. We have looked at a number of opportunities in France and Germany in particular, and Spain increasingly. And we like the space and want to grow our exposure to it.
Okay, great. Eri, we've already met you, so that's fine, that's great. Just give us a brief insight for those who don't know the company, Arnaud. Just give us an insight in terms of the market that you're operating in and also what product you're creating.
Okay, so I'm working for AEGIDE Domitys. AEGIDE Domitys is a French senior living leader in France. We are both developer and operator. We have currently 100 residences all over France, but also in Belgium, in Italy, in Mauritius. And so our model is a build to rent model. It's not a build to sell. So we are very active in France, but also in Europe. And to make a long story short, we could say that our residents look like an hotel. Someone says it's a Club Méditerranée for senior. I don't know if that's true, but for sure we are trying to give some a lot of happiness to our tenant. We have now 11,000 tenants in France and in Europe.
Okay, great. Marcus, maybe just starting with you. I mean, initially we used to have discussions about student housing, for example. Then that's sort of segued into micro-living, co-living. And now there's a big focus also on senior living and actually even moving into healthcare. Why do you think that's moved up on the wish list for investors? What are the key drivers there?
So I think it's a drive from institutional investors looking to diversify away from the main food groups of commercial, retail, leisure, logistics into, I say, what we call alternatives, but it's really into that residential product. Many investors have deployed capital into student housing and see the same granular income stream, the same rental growth profile, the same occupancy trends in the senior space. And as they move their capital from student, they want to deploy into the senior living. We've seen a mature market in France, and now I think we're seeing many of those French operators looking at wanting to go on a pan-European journey. So, as Arnaud will testify, and they are an institutionally credible operator with huge growth prospects. And I think that is a journey that many of those investors want to go on. So it's both the secure income stream, so from a lease perspective, but also wanting to work with a quality operator. and that's often been a bit of a barrier to entry for student housing, is around the operational piece, because in the European markets, those operating platforms are just evolving. And what we've seen in France is operators, working with institutional investors in senior living. But I think a key thing is, and a differentiating factor from the UK market to the French market, is that many of those French operators work in the senior space, they work in the short stay space, and they also work in the operate in the student housing space. So they understand the whole the whole operational piece from young to old. They have that ethos. They understand how to drive income through a short stay through the short stay market as well.
Okay, good. And Daniel, obviously there's been, in the US, there's been multifamily as senior living,
Yep.
certainly in the listed area, but also as a large asset class with institutional money.
Yep.
Do you think that's now going to be coming to Europe as well, in the same way that student housing and PRS really is really evolving?
The capital wants to come. It's trying to figure out how. I think it's a business model question that has been the barrier. So there is a lot of US capital that would like to deploy more in Europe. France is difficult to access because there's a lot of French capital already funding the programs that are there. They're looking at a lot at the UK. The problem with the UK is the business model is oriented towards develop and sell rather than rental. So the capital, this has been tried in the US, and in the end the rental model really won out in terms of the right way to approach the senior living space. So there are a lot of people now really trying to develop rental models in the UK because that's where the capital wants to be. There's a question about whether that's where the customers want to be, because customers in the UK tend to, the kind of thesis in the private market is, an older person who's lived in a family home for 40 years, paid off their mortgage, they have this huge amount of equity in their house, and they're used to owning something, so they don't mind selling their family house and buying into one of these developments. Will the rental model work? It's an open question, but a lot of people are trying at the moment. So there is more than enough capital interested in the senior living space. It's a question of how you can deliver it in a way that capital likes, and the customers actually want to, they like the product and that's what they want.
Okay, good. And Arnaud, in terms of the French market, is that more of a rental market rather than a buyer's market? How does that work with your model?
Yeah, that's a rental model. We used to have the seller model, but it was not very efficient because it was very expensive for the landlord. It was like a condominium. So when the operator need to change the professional kitchen, for example, all the people in the building, the residents, have to pay. So when Domitys started in the business 20 years ago now, they understand very well the possibility of this kind of asset, but they say, well, we will do rather a build-to-rent model. So it's not very expensive. We are not targeting all only the more people with a lot of money. It's very accessible for everybody, and it looks like an hotel with a big restaurant, a pool, and we provide 50 activities per month, 50, and in each residences. So it's not very expensive. I think a studio in a middle-sized town, it's 1,000 euro for the rent level, including the 50 activities. And after that, if they want, they can go to the restaurant, they can ask for cleaning their home, etc., etc. So it's not an all-inclusive, very expensive model, but very accessible. So, and now we have, I think, an occupancy rate of 98%, so almost 100. And the market is so deep in France. We have 5 million non-dependent senior. That's our target. And in 20 years, it will be the double, almost 12 million. So as you mentioned, that's a very deep market. And for the moment, I'm sure that not all the seniors know this kind of solution, because they know the nursing home for sure. They have no choice. They must go to this kind of asset. But not everybody know very well the senior living, meaning for non-dependent.
And Eric, the demographics seem very clear in a way that you've got significant aging across at least Western Europe. What's your sense of that? Does that mean that ultimately there will be people who've been used to being renting, who will then move through the whole cycle, and therefore there will also be a rental product for seniors? Do you see that progression?
I think you're right here, because already, if we talk really long term, already the younger generations today, they lack the affordability to buy, so we see the rise in renting rather than buying, which probably would make it easier for people to accept this rental model in their senior years. But already these surveys demonstrate changing attitudes, even in cultures that staying at home and really aging within the family, like the Southern Europe, are open to these new concepts.
Okay, good. And in terms of one of the things that's often said is that it's difficult operationally, particularly, senior housing, because it may move into care, may move into assisted living, those kinds of things. How are people seeing that now, Marcus, the sort of operational side? Do people still see that as a major challenge, or are people more comfortable?
I think it's we all need to be clear about the definitions of senior living, because it can mean different things in different countries. I think we're all clear that senior living is non-medicalised, and then they move into close care, acute care from there. And that has been one of the challenges for institutional investors to really, let's say, understand that. But that what they don't want to do is having to end up going operating in a close care environment because of all the bureaucracy, the rules and regulations that are often ever changing on a European basis. Whereas senior living is very granular, it's very clear in terms of the level of the service provision, and the fact that they don't have to. There is a level of care, but it's very similar to a hotel, the hotel model. So I think now they're sort of understanding that, and they're seeing the operating platforms like a Domitys or Steva in France, and they're starting to accept and see that there are quality operators out there that is giving them comfort that they're not going to have to deal with close care provision in the future.
And is your sense very much that sort of France, say Belgium, that kind of it has this more established in terms of an institutional product, and that's something that areas like the UK, maybe the Netherlands can look towards? Yeah,
I think one of the other things is around planning as well, around zoning. That in France, zoning for a senior living product is effectively built to rent, so that if for whatever reason the operator goes under, you can return that. Please back me up on this, Arnaud. But you can then operate that as a sort of build to rent model into the open residential market. Whereas maybe other jurisdictions, the UK, if your operator goes bust, then you've got to go through a challenging planning regime to get that changed into an alternative use.
It's even worse than that in the UK. Every single borough has its own take on this in terms of the restrictions they put on, the age restrictions, care restrictions. Some of them don't understand it at all. So literally the UK, you have to go borough by borough by borough to understand what you've got in terms of the planning. So the authorities getting their heads around it and providing a consistent sort of planning consent is a big factor in this sector opening up in a bigger way.
And do you really need in this space, are you mainly talking about new build because the product isn't there, or is it renovating different spaces? I suppose what's the sort of key part there?
It's mostly ground up development, okay, because of the product that you're creating. So in the UK it'll look like very high-end residential. So you need a pretty high amenity share of amenity in terms of the overall developed space relative to a kind of, let's say, more affordable residential. You'll need your F&B, you'll need your gym, spa, pool in some cases. You'll need parking, which is something that in central areas of the big cities in the UK they do less of, but for an older buyer they want to know that there is parking provision and things like that. So you kind of have to develop it.
Okay, and is most of the work that you're doing, Arnaud, is that development, or are you renovating existing buildings that were ex-hotels, or how does that work?
Well, both, depending on the localization and the opportunity. Sometimes we start from the field, the green field, but sometimes, for example, the mayor of the city say, well, we have a manor, very nice, very well known in the city. So if you want to develop a senior living, you have to take care about the old house. So we keep the old house. We made a huge refurbishment, and sometimes we develop 2 wings, for example, in the park, in the garden. So it works very well. Both of the solutions are efficient, and now that's very not funny but amazing, because when we start working with institutional investors, they used to ask me always, but what about the worst case? Could we transform the senior living or in a residential? But for sure, that's residential. That's real apartments, so no worry about that. But now that's funny, because some asset manager call us telling that they've got in their portfolio an old building, office building. Maybe they have too much capex, a lot of vacancies, and so they ask us to think how to transform this office building in a Domitys residence. So that's very interesting that's a marker which show that now the investor, they know very well our product, and they love it. So it's a new market also for us. It's a greenfield refurbishment, but also maybe transformation from an office building to a senior living.
And I'm wondering how much of this also area maybe fits in with that sort of ESG impact investing side, or to anybody, in fact, just in terms of that side of things. Is that also something that's maybe driving more institutional capital into this area?
I think so, but it's very, very new, this thought process. So some of my colleagues are going through this thinking process now, and certainly we've talked about what we've done in terms of funding developments of senior living, and that counts as ESG, but I think you also have to think about where in this space you're providing it. So if you're building very expensive flats and selling to relatively wealthy seniors, does that count as ESG, or do you need to be thinking about a rental product which is accessible to a larger part of the market? So there are all these kind of factors that at the moment make it hard to decide whether what you're doing is ESG or not.
Okay, and obviously, Marcus, I mean, Arnaud here has obviously built up a brand in France that people recognise. How's that working in the rest of Europe and the UK? Because often as markets mature, you get consolidation in the market, and often, somebody becomes a bigger brand. How do you see that at the moment? Where are we in Europe in that cycle?
I think that in terms of senior living, it's still very much in its infancy, and we are looking at the French market really as to how those operators, those developer operators, can expand on a pan-European basis. I guess it's up to those operators as to whether they want to, how quickly they want to expand. Are they willing to joint venture with private equity or with with institutional capital? And that's something that I think that we'll start to see over the next sort of 6-12 months or so. I think we'll see some institutional partnerships, perhaps more so than private equity, purely because of returns that can be generated or can't be generated for private equity in some of these target countries, be that sort of Iberia, Germany, and they would have to look at developing into areas like CEE, where perhaps we're maybe sort of 5 years, 10 years before we actually see a credible market there. So that would be my view.
And that makes it in a way more difficult for investors sometimes if they're not sure that there's a natural operator that they can work with. I mean, that would, in terms of the challenges for the sector, you're obviously seeing, Dan, you're seeing capital coming in looking for a home. What's that capital saying about where it would invest and what it would like the industry to do to make it more investable?
Well, number one is the capital would like to see scale in terms of what it can put into the space. And I think other than some French operators, it's really hard to find that. The UK is a developer-led model for the moment, develop and sell, with some residual cash flows behind that. But the amount that you can put in any particular, there are only there's probably 3, maybe 4 brand name senior living operators who you would partner with. The amount of capital you can put in is still sub 100 million, more or less. So the scale is one, and as I said before, rental versus develop and sell models is the other major differentiator. The capital would like to access effectively a rented product. And as I said, there are some UK operators who are starting out there, but it's very nascent in terms of how deep that market is versus the develop and sell market.
Okay, and Eri, I suppose looking at the demographics, you've got increased urbanization across Europe. Does that mean that increasingly this sort of senior living is going to be an urban experience? And does that necessarily mean it's going to be bigger cities? Or, I mean, it sounds as though, Arnaud, you're developing also in smaller towns and different areas. Do you think that urbanization shift is naturally going to lead to a more of a focus on cities for this?
Yeah, I think also this age group, as we saw in the surveys, they want to have they want to have fun. They want to be in close proximity to amenities. It's ironically the product of senior housing could look very similar to the product of a student housing. They're urban and they want the same quality in the immediate environment. However, I also think that there is potential for Club Med type of products for the people that like more to be out of towns. But definitely urbanization will lead more projects in the big cities.
And is your model, Arnaud, is that because obviously, much like the UK and everywhere, I guess there's rural communities as well as those that are living in towns and cities. Is it seniors who might be living in rural areas who are then moving to the nearest town to create a community in a way? What's happening? Is it people who are used to renting in the city and are staying there, or is it people coming from outside to do exactly what Eri is talking about, is then to benefit from everything being close by, maybe walkability, livability, those things?
Yes, for sure. The senior, when they arrive in Domitys, they are looking to be, for example, closer to their children. That's very important. And also we are targeting non-dependent senior. We need to have a urban model because they have to do some shopping, go to the bakery and the supermarket. And as you mentioned, I think the senior, the more older they are, the more they enjoy life, if I can say that. They don't want anymore to be in the countryside alone, because that's really the main problem. So that's why we are always in town, not for sure in the historical center of the town, because it will be too expensive. The model could be too expensive, but they want life, they want activities, and maybe they want also some noises, you know what I mean? They don't want to, they love it when it's very funny, because sometimes we are localized near in a big city, near a big street, and they love to to see the window and the people and the car downstairs. So yes, it must be, according me, a urban model, because some of them, they don't drive anymore. So for sure, it's very difficult to move. And the main problem is that, well, when they stay alone in their house. So yes, that's definitely a urban model, even if sometimes in some middle-sized town, they can have both in a localization in a nice manor with some green park and trees, but it's mainly in town, yeah.
Okay, good. And are these mainly people who previously rented, and so it's just moving from one form of rent, or are people selling their house and then moving, but still renting?
Yeah, that's mainly, they used to have their own apartment or houses, so they were landlord, so they sold the house or the apartment, they put the money at the bank, give some money to the children, 60 years old, and then they enjoy their life. You know, we saw a huge difference between the first tenant we had when we started in the business 20 years ago. The spirit, well, was, well, I've got some money, but I don't want to spend. Who knows? Maybe they remember a bad history. And now the spirit is, well, we've got some money. We have been working all our life, now we want to enjoy. That's very, very important that to understand the spirit of the tenant which are arriving in our residence now.
So can we see any of the sort of trends that we're seeing in co-living also coming into senior living?
We've seen some really nascent business models that look at trying to combine different demographic sectors. So, for example, I'm thinking of something we looked at recently where they were combining a senior living product with nurseries, and where, you know, there's a view that the older generation have some real kind of psychological benefit from seeing younger children around, and there's some benefit for the children. So there are concepts like that. I wouldn't say, though, that the aspect of co-living that probably doesn't work for the senior living space is size. So at least my experience is that when you develop a senior living product, you generally need, even if you're developing flats, they need to be a little bit bigger than they would normally be for kind of an urban apartment kind of construction. Because quite often you're downsizing from a family home, you're bringing a lot of things with you, you need storage, and you want an extra bedroom because you might have a child coming and staying, and you know, you just need that flexibility. So a bigger space is usually required to make senior living attractive.
Okay, I mean, it's interesting. I had a conversation with the student hotel recently, and one of the things they were experiencing was that part of the tourist part of it was actually independent seniors travelling and benefiting from the fact that there were shared spaces, and so they could actually meet people and explore the city and do things like that, which is just quite an interesting concept, I think. It's a question for you, Arnaud, but also anybody else. In terms of the units, are you creating different types of units to meet different types of demand, whether that's to do with size or space? So are you having to sort of adjust what you're doing to meet different needs?
Yeah, our residents are around 120 apartments, almost 1,000 square meters of common space, restaurant, pool, and hairdresser, and gym, etc., etc. Concerning the apartment, we have three kinds of apartment. We have studio, 25 square meters. It's not student housing, that's bigger for sure. And we have one bedroom apartment and two bedroom apartment. Yeah, but the main demand is concerning the one bedroom, 45 square meters, almost. Yeah.
In terms of the market, bearing in mind some of the things that we've seen and where we see the trends going, I suppose, where would you invest in the current market if you were going to invest in this sector? And also, in terms of strategy, what do you think will be more in terms of a longer-term success, particularly in the senior living space? Who should we start with? Should we start with you, Arnaud, and we'll finish with you, Marcus?
Well, our strategy is to develop more and more residences for sure, because I think in France we have one residence per 10,000 potential senior. So the market is very deep. And same thing, we are working very hard to develop our business model in Europe, because the problem is the same for all kind of senior, whatever you live in Brussels or in Portugal. So trying to find also new activities for senior, and always trying to improve the quality to get some very nice feedback, because it's a business. But I don't like this word, it's not very nice. But we do business, but we take care about our tenant. They are clients. It's not, I have nothing against nursing home, but in nursing home they don't have the choice to be there. Here in not only in Domitys, but in the senior living, they made their choice to come in, and they can move very fast because it's a 1 month's notice. So we have clients, and we have a big staff of 20 employees. So they are not part of the family, but almost, because they stay an average of 8 years in our residence. So for sure, all the team is living the whole year with the tenant. So it's going to be very involved with our tenant. So make business, but take care and try to treat our tenant how you want your old mother will be treated. That's my ADM.
Okay, great. Eric.
As we were discussing, I would go for urban schemes in the biggest European capitals.
Urban schemes, biggest capitals. Okay, good. Dan.
I think I have to agree with the two of you. I don't know much more to say, except I think that there's a massive growth opportunity across Western Europe. I would focus on urban versus, say, slightly more rural or out-of-town locations. High service offering. I do think rental will be the way it goes in most countries long term. So, you know, we're looking to partner with good operators who are expanding into those markets with that mentality.
Okay, great. Marcus.
Okay, I think in a nutshell, I would be focusing on the UK, because I think there's a massive, huge opportunity for the rental model to evolve there. And we can actually see some of the operating platforms that we can take from student into the senior space. You know, you've got the likes of Greystar, for example, who have, and CA Ventures, invested in student, build-to-rent and senior in the US. They've built their bridgeheads in the UK and are now looking to enter the European markets, but Greystar obviously have. So that would be a focus for me, and I think there's a real way that we can win over the planning argument with the local boroughs about the product, the gap in the market that we're filling. In terms of returns, I really see, you know, Spain and Iberia as being a huge opportunity. It's the sunshine, and I like visiting there this time of year.